Semper Capital has been managing mortgage-backed security risk for Costa Asset Management for more than 5 years now. So over that time, we've grown our business portfolio to an extent that we've relied increasingly on their balance sheet. But they've relied increasingly on our mortgage-backed security systems, our web-based loan management systems for their portfolio management. So it's a symbiotic development, really. Well, first of all, it's a formalization of an existing relationship. So it's bringing the strengths that each of us have in the relationship together in a formal business with a business structure that enables us to maximize our capacity for growth. When we talk about the markets we will look to operate in, there's the low-hanging fruit, which is the existing market we're in, which is the non-bank space. And that comprises both the private lending space, which is currently populated by a disparate group of private lenders whose availability to capital depends upon exactly the amount of equity they have, but also the non-bank lending space, which we will seek to increase products in as we develop our portfolio. I think initially, no. Let's face it, the bank's dominance of the high volume and low margin space is pretty thorough. But we're at a point of considerable change in the banking space. The non-bank lenders are able, as they grow their portfolios, to increase their capacity to borrow cheaper and cheaper funds. But they, by and large, take the risk that banks, I think, are fairly happy for them to take from them. But there's the emergence of new technology-based, web-based information management systems which will change this. And we're talking, of course, about the crowdfunding and peer-to-peer lending space, which the banks are going to have to sit up and take notice of as time goes by. Well, in a word, vital. If you want to be a cottage lender, then it's not so important. But if you truly want to compete with volume by price, then you're going to have to use technology to do that. What we're talking about in the market as far as change is concerned is web-based information management systems that create efficiencies that enable lenders to compete directly with the banks by taking the shortest route of introducing those who have money to those that need money in the quickest possible route without the costs associated in the normal banking relationship. And that certainly is, once they overcome two specific issues, one being the regulatory issue, how to appease the regulator and ensure the regulator is comfortable with that structure, then what this technology, web-based technology, enables a lender to do is to rapidly disperse products via the broking network, as well as to gather investment funding and bring those together in the cheapest possible format to truly take on the banks. And so the banks will set up a list, going back to an earlier question, and it's an area that we are moving in. It gives you an insight to how we're shaping our business for the future.